President Donald Trump signed the One Big Beautiful Bill Act into law on July 4th, a day after the House narrowly passed the Senate amended version in a 218-214 vote. The legislation delivers an estimated $4.5 trillion in tax cuts, makes the 2017 individual tax brackets permanent, and introduces new deductions for tips, overtime, and seniors. However, the legislation cuts nearly $1 trillion from Medicaid and billions from SNAP. It's also projected to add $3.4 trillion to the federal deficit by 2034, according to the Congressional Budget Office. Do you have questions about how these changes could affect your taxes? Speak with a financial advisor today. Key takeaways: Trump's tax plan will make the 2017 Tax Cuts and Jobs Act, TCJA, brackets permanent. The legislation also includes new tax breaks, such as deductions for tips and overtime, as well as higher standard deductions for seniors. Tax brackets were scheduled to revert to pre-2018 rates in 2026 if the TCJA tax cuts weren't extended. The state and local tax, SALT deduction limit, will increase to $40,000 in 2025 under the plan, and then rise incrementally each year through 2029. However, the limit will then revert to $10,000 in 2030 and beyond. Analysts estimate the massive tax and spending plan will add $3.4 trillion to the federal deficit over the next decade. How does Trump's tax plan affect your tax bracket? With President Trump's signature on the One Big Beautiful Bill Act, the current marginal tax rates are now permanent. These tax brackets, first enacted under the 2017 Tax Cuts and Jobs Act, TCJA, were previously set to expire after 2025. Without the new law, federal income tax rates would have reverted to their pre-2018 levels, when the top marginal rate was 39.6%, potentially increasing taxes for many households. Want to see how Trump's tax plan could impact you? Read our full overview here. What are the current U.S. tax brackets? There are currently 7 marginal tax rates in place, ranging from 10% to 37%. Marginal tax rates apply only to the portion of your income that falls within each tax bracket, not to your total income. To determine your marginal tax rate, find the highest tax bracket that includes part of your taxable income.